Good day, everyone. We're back here in Investagrams, your all-in-one stock market and financial market platforms. You could analyze the markets here, learn the basics, do some stock screening, virtual trading. So you could just check out our platform here and feel free to interact with our community. You could post charts, ask questions. All right, so for this video, I'm going to discuss one of the most favorite plays of conservative investors. So let's talk about dividend plays. First of all, what is a dividend? So if a company is earning money, they have a portion of their profits that they want to give back to the investors as a reward, or just to entice investors and reward them for being shareholders, then that's where a company can pay out dividends. Dividends is just basically profit share. So the corporation allocates a certain portion of their earnings as dividends. And let's take a look at this example. This stock is SPC. It's a power corporation. And then on this date, let's check it out. What day is this? Around here. So around April 16, it had an X date on a dividend of 40 cents per share. So if you were holding one share, you'd get 40 cents a piece for every share that you have. So now let's take a look at the dates on the dividends, okay? So here you have X date. So this is the date where you need to be holding the stock in order to be qualified for the dividends. So example, you bought in this breakout point here. So this is March 22. So example, you bought in March 22. You need to hold up to April 16 in order to qualify for the dividends, okay? And then what's the next aspect of it? Record date, Tuesday, April 23. So this is, as an investor, you don't need to take a look at this seriously. It's just more of their back end side, I think, for formalities. So the only thing that you need to know is the X date and the payment date, of course, where you'll get your dividends. So usually what happens in a dividend play, so I'll show you my trade first. So I'll show you how I handle SPC, the dividend play in SPC. So here's a snapshot of my portfolio. Hang on. So here you can see my position in SPC. My average price is at 664, 180,000 shares. So totaling my costs around this would be around 1.2 M plus. And then the market price during this screenshot, I think this was in April 15. So this screenshot was on April 15, one day before the dividend, the X date of the dividend. So I'm going to show you why I made a shot here and what I did during these two dates, April 15 and April 16. Alright, so let's begin. So first, hang on. I'm gonna go back to my order trail here. So what did I do during April 15? Yeah. So I trimmed half of my position actually in April 15. So usually, so here you're gonna see that I sold around 90,000 shares, or more than half of my position here. Yeah. Okay, so why did I trim more than half of my position one day before the dividend play? So this totally depends on your goal. Okay, I'm gonna show you an example. So I'm gonna show you how I traded this stock, knowing that it's gonna give out dividends soon. Okay, so here I just follow a basic technical setup called the breakout, right? So after the consolidation at this point, so after a few months of consolidating, and I buy on the breakout point here, right? So of course there are many tranches to my execution, but you can see in my average it's around 660 plus. Okay, so basically at this breakout point. So I place my average around that level. Now, why did I sell one day before the dividend play? So usually what happens in a stock is once the X date arrives, the market suddenly prices in whatever dividend is given out to the shareholders. So for example, here you can see in the price structure, the stock was doing 740, 745, 750, but then after the X date, the market suddenly priced in that, hey, you guys have already received have already qualified for your dividends, so we're gapping down the price. So this is not always the reaction, you know. Sometimes in X dates nothing happens, but for stocks that are illiquid or mainly known as dividend plays, these gap downs usually happen. Okay, so since SPC is relatively an illiquid stock, so I already prepared myself as a trader. So I'm not a long-term investor. Take note, I'm an active trader. So what I bought here is a technical setup, but then since the dividend plays came out, knowing that the X date is April 16 and a 40-cent dividend is quite huge, what I did was to anticipate the reaction already. Okay, so if you wanted to qualify, oh by the way, I forgot to mention, if you wanted to qualify as a holder of the dividend for the X date, if the X date is April 16, you need to buy one day before. Okay, so you need to be a holder on the day. You can't just buy on the day itself to avail of the dividend. So you need to hold the stock one day before the X date, so that when the market opens, you're immediately qualified on their records on the X date. Okay? So here, the dividend players are already either holding the stock or just doing nothing, or just like me, if you're an active trader, you'd probably be anticipating the gap down already. So what I did was, again, I'm going to show you my order trail. I sold bulk of my position here. So 180,000 shares on SPC is quite illiquid, which is why I decided to play it safe. So I trimmed my position so that it can be more lightweight and so that I can lean on the safer side. So I took some profits here, 750, 759, then 740. So trimmed lots of my position here. Then, okay, let's take a look. So this is the 180,000 position. Let's take a look at the charts. So I protected my profits already because I'm anticipating the gap down. And on the next day, it did gap down. The stock went as low as 670. All right, so let's try to calculate the difference from my selling point. So it went as low as 74 cents. Okay, so if you weren't interested in the dividends alone, you could have bought back your core position. Of course, you won't be able to buy everything at the lows, but then take a look. The dip is more significant than the actual dividend. But let's take a look at where the stock closed. It closed at 31 cents below, 30 cents below. So if you're a long-term holder, you still won during this one-day swing. Okay, since the stock closed at 714, but take a look at the stock now. It's 695. So let's take a look at the difference, 50-cent difference. So we would have still been winners if we sold instead of just merely holding on the shares, because we were in this case we're now able to buy back at a lower price. So let's take a look at April 16. What did I do on the day of the actual dividends? For April 16th, I sold my remaining. So I sold 100,000 shares plus on day one, April 15, and then the 78,000 I sold on day 2 on the actual X date. So meaning on the 78k shares, I'm qualified for the dividends. So I was willing to sell it down to 7, so I placed my psychological stop there. But the actual proceeds from this is not 7 because I'm able to get the 40-cent dividend because I held on the stock up to the X date. All right. So if you want to check the X dates and the details of the dividends, you can see here. All right. Just press the D button on the near the volume below. So in totality, the profits that I got from this trade is around 100,000 plus, regardless if I sold the core position and availed the different and availed of the dividends for only less than 40% of my total core position. So in totality, I still net around 100,000 plus for this trade. So, but the dividends is gonna be paid at, let's check out the date, April 30. So tomorrow. All right. So I expect 78,000 times 40 cents per share to come into my account tomorrow. So that's how I handle dividends. So there are two approaches. Mainly, you could anticipate if you've bought early on the stock, you can anticipate and sell one day before the X date, or if you believe in the long-term capability of the company, you can hold up to the X date, avail of the dividends, and do nothing. So some people have made tons of money just by becoming passive investors. So for me, I'm a different trader because I'm more on the active side. But for those of us who's looking on just having passive income, alternative to savings, then dividend plays are quite a good option for you. All right, so now I don't have any SPC right now, so probably what's gonna happen here is we're gonna look at the stock to consolidate first. As long as it's below 7, probably won't be doing anything. So either you wait for some dips back in 650 if you want to buy on support, or if you want to buy on strength, I'd wait above 720 again, and wait up until it breaks out and takes the gap once again. So again, besides the dividends, you also have to assess what kind of company are you trading. Does this have potential besides the dividend play, or is the stock just merely there and it suddenly gave out divs for no reason, or for no consistent reason? It's not really earning, it's just part of some one-offs. So you have to be considerate of that. Okay. I'm gonna show you an example, a stock that gave out dividends but had a hard time recovering. So here, this is ABBA. Doesn't have that much of recurring income, I think. Then look at the gap downs. Up to now, it still hasn't recovered past the gaps, the dividend gaps. Okay, so this is one example. So it really depends on the overall health and the structure of the company, the fundamentals, technical structure. So you have to assess all of these besides trading the dividends. Okay, but of course, if you're just a passive investor, just make sure that the company you're trading has consistent earnings growth and would most likely pay out dividends in the following years if you're willing to hold it for the long term. All right. So I hope you learned in our video. That's it for our SPC dividend trade. So if you want to learn more about the stock market, feel free to subscribe to our YouTube channel in Investagrams. And then you could check out Invest to Learn and enroll into our classes here. We have lots of free classes, and if you want more high value content, you could subscribe to our premium videos as well. Okay, so that's it for our video today. Thank you so much. I hope you learned and enjoyed, and have a good day.